we seem to have this confirmed. That'll be a huge wave of relief for politicians, people in the markets.
Sure.
What exactly is on the table in terms of cuts? I mean, are these figures realistically manageable now?
Well, let's get to that in a second. It's surreal. You're watching protests in the square in Syntagma Square, and you see a market rally and the euro going back up again based on the fact there's a relief in the near term. But as you say, let's look at the numbers. This is only a $300 billion economy. What they're asking for the Greeks is between 2011 and 2015, cuts of $40 billion. They put a very high target of $70 billion in terms of privatizations between now and then we're looking at public sector wage cuts of 20%. So for the union workers that are protesting in the square right now, they're going to see cuts of 20%. We're looking at pension cuts of 15 to 20% for the retirees already. And for every 10 retirees from the public sector, only one will be replaced. So what they're trying to do is shrink the size of the public sector so they can balance out the economy in the future.
Well, you can bet that probably at the moment the protesters, they're hearing that these austerity votes have been passed. They're going to be furious, aren't they, John? I mean, what's the situation looking like going forward? A number of these people work for the very institutions that the Greek government is trying to sell off.
No, in fact, if you look at that $70 billion number, and there's some numbers being tossed around today, less than a third are ready to go to the market, about $19 billion. And as you suggest, a number of those have public sector workers and the unions in them. I would invite our viewers to go back to the attempted privatization of Olympic Airways going back 10 years ago when British Airways actually took a stake. Then they uncovered this and looked at some 22 labor unions involved in the airline and said, not for me, and they actually gave the stake back. And then the Greek government worked out something else. This is the huge challenge here. They'll be lucky to raise $2 to $3 billion in privatizations in 2011. And can they really deliver on the $70 billion between 2011 and 2015? I think we have to look at the staircase of where they're going from here. The Greek government needs to start making debt repayments July 15th through August of $9 billion. They're hoping to get another $17 billion this weekend at the ECOFIN meeting, that final tranche of the first round. Then they make the debt repayments, and then they hope by the end of July there's a second huge austerity package bailout for them of about $143 billion. So that's what the market's looking at today. Hurdle number one crossed, passed in the parliament. Hurdle number two, the ECOFIN meeting. Hurdle number three, the Greeks can make their debt repayment. And then number four is that second round of $143 billion around that level going to be available to them.
We've also got tax hikes going on here as well. That presumably will stall the economy at a time when it's already stopped growing.
Well, it's a phenomenal point. The economy contracted 5.5% in the first quarter. It's an economy that contracted 4.8% in 2010 and 2% in 2009. So if you can understand the Greek people there, they're saying, look, this is our third year of austerity right now. It's contracting. If you're going to raise taxes to close this gap, the debt to GDP right now of 157% to GDP in 2011 is only going to be reduced to 140% by the time the austerity is over. And that's why they're in the square.
You can see why the Greeks are wondering whether it's all worth it to